Southeast Radio's Business Matters with Karl Fitzpatrick.
I'm now joined by a resident economist, Marc Coleman. Marc, on the multinational jobs front, there was two concerning stories made the news this past week. Accenture announced that it is to cut almost 900 jobs in Ireland, and Barclays is exploring moving its EU headquarters from Dublin to Paris with the potential loss of hundreds of jobs. What are your thoughts on this?
We're beginning to see signs that the chronic cost competitiveness crisis facing the economy, particularly the non-traded economy, everything from the provision of housing costs, insurance costs, utility costs, all the costs of things that are not internationally tradable are significantly higher in Ireland because of a lack of competition. The fact that agencies like the IDA have now announced that they're going to help those people in Accenture find new jobs underlines the emphasis and the strong priority given by successive governments to the multinational sector, and there's nothing wrong with that. But why are we now in a situation where hundreds of jobs and possibly thousands and tens of thousands of jobs are going to be lost? It's because we've taken our eye off the domestic economy in a big way. We haven't paid attention to competition. We haven't addressed the problem of cartels in our economy. And as a result, multinational companies are finding that they can indeed relocate and save buckets of money. So we've done great guns. We've gone gangbusters on international financial services, high tech, and all of those multinational industries are fantastic. But we're now victims of our own success because we only cared about the multinational sector. And as a result, we have not fundamentally yet addressed the cost crisis of our economy, the cost competitiveness crisis. It's been brewing for over 20 years, Karl. I've been reading successive reports of the National Competitiveness Council way back when Professor Don Thornhill was chair. I have constantly pleaded with successive governments to address this issue, to bring in more competitiveness. And unfortunately, successive governments just haven't. I don't know, it's not deliberate, but I think they just haven't put it as a priority. I'm afraid to say that because of the post-pandemic digital work situation we have, more and more companies are going to realize there are skilled graduates in India, Pakistan, and the countries around the world. By the way, our English language doesn't matter a damn anymore. In fact, if anything, other countries have more proficiency in English than we do. So that's a very, very old, outdated, post-colonial kind of mentality. We have got to shore up our cost competitiveness, and that means very tough decision-making. The first line of attack there is the housing crisis. There's a bit of good news there, if I can mention it. The Housing for All project is now running ahead of target, and housing statistics that came out in the last few weeks show that our rate at which dwellings, private sector dwellings, is increasing is now beginning to match the rate of population increase between the 2016 and the 2022 census. So there's good news that the housing situation is beginning to improve, but we need to fast track that. That goes back to what we were talking last week about removing bottlenecks from the delivery of infrastructure, and people can hear that on the podcast from last week's program. But it also means looking at a range of sectors. We're looking at reform of RTE and broadcasting, which is long overdue. But there are other semi-states, particularly in telecommunications, energy, and other areas where huge costs are imposed on domestic business and multinationals, and those costs have to come down relative to other countries. We shouldn't, but by the way, it's a bit like the Gardaí on the streets. We should, of course, be keeping the tourists safe, but we should also be putting Gardaí on the streets to keep Irish citizens safe as well. Likewise, we should be bringing the domestic cost base down to help multinationals like Barclays and Accenture stay in Ireland, but we should also be doing it for the mom and pop stores and the SMEs that you and I have been talking about for the last couple of months, Karl, because you know what? They're more than 2/3 of the economy, and multinationals come and multinationals go, but it's the store and the garage and the shop around the corner that is the lifeblood of the economy in the long run, and they matter as well.
Well, if you've just tuned in, that was our resident economist, Marc Coleman, and Marc will be joining us again on next Saturday's show.
Southeast Radio's Business Matters with Karl Fitzpatrick.